think about the international provisions that came about as part of tax reform and some of the interactions between all of them, what are some key takeaways you think for people?
Well, Ken, I think the first thing is that these provisions are all interactive, and so it's really important to model them. And as you run scenarios, you have to understand that when you change your structure and it affects GILTI, that it's going to have implications on BEAT, FDII, and your foreign tax credit basket. So that's important. But also, anything you do in terms of restructuring, you have to consider all of the global changes that are going on, especially ATAD, the MLI, and state aid.
Yeah, a lot going on. Sherry, thoughts?
Yeah, and I think in relation to GILTI, there are certainly still plenty of uncertainties around how some of these rules will apply, how expense apportionment in particular may apply. But one thing is certain, foreign tax credits are still very relevant, and that expense allocation can lead to maybe some unanticipated results. What is pertinent is there are a lot of aspects of the structure, and this goes to U.S. taxation, but also globally, that really play into what that GILTI result is. So there are facets of looking at your foreign operations, your foreign tax profile, and then, on the top side, looking at these expense allocations to figure out how they all piece together.
Marco, thoughts?
Unintended consequences. I think it's clear that you need to model, but also to understand exactly what happens, in the background. And we have great examples. GILTI boomerang being one of the leading situations where you wouldn't expect any particular impact, and yet because of the way the rules work, you actually have potentially unintended consequences, and therefore tax liability that really increases materially because of that.
Yeah, great. Thanks, team. Appreciate your thoughts.